Hello everyone, welcome to Market Snapshots for today. The markets have barely moved, be it the US market or the Indian market. Nifty closed at 24,048, just 0.11% above its prior close. Nifty 500 at 23 to 63.28% above its prior close. Nasdaq was down by 0.28% and S&P 500 was up by 0.38%. Uh, I think this was a little positive news for the Indian markets. This is Nifty 500. The advances were 304 to declines of 196. Last three, four sessions, the advances and the breadth has been very poor. So in that perspective, I think this was slightly better. New highs, 12 new highs to 488 new lows. And breadth also improved a bit, I would say, nothing significant, but for sure, I mean, at least there is something which has just crossed over 50 MA. Overall, the numbers look like above 20 MA, 270 stocks, above 50 MA, 313 stocks, and above 200 MA, 288 stocks. So no momentum as such, but then for sure there is I mean, there is a positive that few of the stocks have crossed 300 marks, so that is good. Like I said, not much happening, pretty much where market is there where it was. And I think one of the positives was the FII selling was pretty less yesterday. It was not that they did not sell, but then they just sold a little less. That was also one of the positives. This is Nifty 500 again, very similar to what we have been seeing in the last 3 4 sessions. The market has barely moved. Talking about the summary, Nifty 50 is still bullish, participation is mixed, and breadth is mixed. And Nifty 500 bullish, participation became strong after quite few sessions, and breadth is still mixed. Let's hope the participation converts into breadth and we find some consistency and the market looks forward. This is S&P 500. Again, pretty consistent here. I mean, 257 advances to 243 declines. S&P is the index, which I like the most at this point of time, just because of like the kind of consistency it has shown from almost 3 4 weeks when we compare to rest of any indexes like which I look into. I mean, this has been the most consistent index. New highs 20 against 480 new lows. The breadth is also pretty fine. I think there was a little bit of chop above 20 MA, but then overall it's a very consistent, index. The way the chart looks, the way the participation has performed or the breadth has remained. So I think very consistent index. Above 20 MA, 262 stocks. Above 50 MA, 311 stocks. Above 200 MA, 320 stocks. Looking at the charts, this is Nasdaq 100. I mean, pretty positive chart. I mean, there's nothing negative about it. It is just that the numbers have not been supportive, and I think people have tried to, liquidate from large tech, from the mega caps into large tech, utilities, consumer durables, those kind of industries, and that is the reason Nasdaq has not been doing very well. But then there's nothing negative about this chart. I mean, if at all, participation breadth increase, I think it will be matter of time because, I mean, it's a positive looking chart. S&P 500, this is my favorite bet right now. I mean, I like the chart structure a lot. I mean, just look at it. It is consolidating at its highest level. So chart perspective, it looks very good. Participation and breadth have been very consistent. So this is my favorite bet. Russell 2000, again, I think it has lost its strength at this point of time. Again, there's nothing negative about this chart. This is also a very positive looking chart. The breadth and participation were doing fine, but I think last 2 odd weeks that has not been in sync, and that is the reason, while it was hovering somewhere here, the anticipation was it might break out, but that did not happen and it has come down. Again, it has not become negative. It is just that unless and until breadth and participation become uh, inconsistent to this rise, it will be difficult to say. I mean, at least I'll not bet till that point of time. The overall summary, the trend participation breadth, US 100 looks bullish, participation is mixed, and breadth is mixed. Uh, I mean, this is the most consistent bit about Nasdaq 100. I mean, Like the thing is, it is not becoming weak. For sure, it is not strong, but it is not also not becoming weak. So for sure, I mean, there are people who are looking a lot of opportunities in here too. But then we'll have to wait and watch. S&P 500 bullish, participation mixed and breadth mixed. So I think pretty good index there. And Russell 2000 again bullish, participation mixed and breadth mixed. Out of three, I'm just looking at S&P 500 at this point of time. And the global macro, the dollar and the yields have subdued a bit. Maybe, that is the reason yesterday, even Indian markets, at least if they did not gain, at least they did not lose much. So that's a positive. I think that remains a positive for overall market, not only Indian market or US market, any market. If US yields are not rising, dollar is not rising, that gives a lot of favor to all the equities all across. VIX at 1667 is pretty stable. Bitcoin at 64,360 it barely moved. I mean, I think the prior session had closed at around 64,800. So, I mean, less than 500 points movement in Bitcoin is almost like nothing. And gold also hardly moved. Like, I think it closed prior to this session at 4051 and yesterday it closed at 4040. So, hardly any movement there. The chart structure, I mean, this is dollar. I just hope it goes below 50 MA, and I think that will be a great help to all of us who are equity participants, because the rising dollar definitely doesn't help the equities market globally. Bitcoin again, like, see, the threshold remains 50 MA and not 50 MA, just it crosses at least 50 MA should start trending up as well. At this point of time, it is just going down. So it is wait and watch for Bitcoin if you want to play positional or swing, but then very good opportunities on day trade. So maybe there you can utilize. And gold, hardly any movement as such. Like, I think it is going down plus sideways. So I think it's a difficult. I mean, at this point of time, gold would be difficult to trade, I would say. Whatever, I mean, time frame you want to trade, be it swing, positional, or day trading, because gold is not moving much. The overall sentiments, I would say, it's a very it's still mixed bag. I mean, unless and until a real strength we see, uh, indexes perspective or sectoral perspective, it is very difficult to say what is happening. But like I have been saying, it is not a time that you shouldn't be trading, investing. It is just that your exposure should be around about 50 to 60% if you are making new positions. If you already carry your existing positions, I think just stick to it, stick to your stop losses, and no point liquidating. It is just, if market is not at this point of time, it's just that the market is neither bullish nor bearish. And it's not like sideways also. The thing is, there are pockets which are very strong. So, like, I mean, my understanding says it is the market has become little cautious, and that is the reason, people are preferring defensive sectors, hard assets, those kind of verticals, and there you'll see very good opportunities. For instance, if you look at the financial index in the US, if you look at healthcare, doing very well. If you look at utilities, industrial, doing very well. Indian perspective, if you look at reality, healthcare, consumer durables, doing very well. So like, it is just that you'll have to, uh, instead of broadening your horizon, I think you'll have to become little picky and choosy what is working, and there are very good opportunities. But it is just that, like, if you're not wanting to put that extra bit of effort and still want to trade, I think be little very cautious about it, because liquidations keep happening. I mean, all of a sudden the markets rise and that they keep fading away. For instance, my understanding says it was Nifty small cap, Nifty micro cap, which were doing very well. At this point of time, also, when you look at the index, the index looks very good, but the participation and breadth is not there. Now, the third point is, from those indexes itself, most of the top gainers are coming. So basically, what does it means is, there are pockets in those indexes which are doing good. In earlier April, May, I think the overall index was doing good, but at this point of time, there are sectors which are doing good there. And maybe, their weightage is a little higher, and that is the reason the index also keeps rising. So index might not be your best bet by looking at it that okay, I'll go all in this index. I think first you'll have to decide upon your index, then your sectors, and that is how you should be betting. And that is the reason I'm saying, I mean, not a time that you shouldn't be trading, investing. It is just that you need to be little picky about it, and with an exposure of 50-60%. And like I've been saying, if you prefer day trading, maybe Bitcoin keeps offering you a very good opportunities. The second bit is I find Bitcoin to be the most uh, I think the best indicator in terms of market sentiments. I mean, where the market is heading right now. See, Bitcoin is trying to rise. If at all this happens, you'll see a massive inflow in equities market. Because like see, Bitcoin is basically, it tells you the risk appetite of the market. If investors are willing to take risky bets, they would put money in Bitcoin, and we can definitely see the reflections in equity markets. But the moment investors become defensive, they first liquidate Bitcoin. At the same time, that could be reflected in the equities market. That's everything for today. I hope you all found this useful. Thank you so much and have a good one. See you next time.